What is driving the recent volatility in silver, Bitcoin, and the broader stock market?
That's the question our experts are tackling today. Join George Gammon, Stephan, and Jeff Christian as they break down these complex issues.
And the best part? We've condensed their key insights into bite-sized summaries powered by artificial intelligence, saving you valuable time.
Stay tuned as we dive deep into the factors influencing silver's unstable trajectory and what it means for your investments.
Plus, we won't miss out on Bitcoin's intense fluctuations and the looming questions surrounding stock market stability.
Let's get started, diving right into George Gammon's analysis of the silver market volatility.
Today, we're examining the volatility in the silver market with insights from George Gammon.
George highlights that fluctuations in silver prices are influenced by various macroeconomic factors.
George Gammon identifies key drivers behind silver price fluctuations, placing a strong emphasis on inflation expectations.
He explains that when inflation rises, silver often becomes a safe haven for investors.
Additionally, geopolitical tensions lead to increased demand, which further drives prices.
George emphasizes how inflation influences investor behavior, heightening the desire to hold silver.
This trend indicates a strong relationship between economic conditions and the demand for silver. According to George, geopolitical events play a significant role in silver price spikes.
When instability arises, investors seek safe haven assets like silver. George notes that market sentiment often fuels speculation, leading to volatile price movements in silver.
Understanding these sentiments is crucial for investors. What does George predict for silver prices moving forward?
George anticipates that if current trends continue, silver prices could see significant increases.
He warns that speculative trading could lead to short-term volatility. George concludes that staying informed about inflation trends is key for successful investment in silver.
He suggests considering market sentiment before making decisions.
A well-informed approach can mitigate risks in the volatile silver market. Today, we're diving into Stephan's insights on Bitcoin's current situation.
Graham discusses how external factors, especially regulatory changes, have contributed to market volatility.
Graham highlights that regulatory developments can materially impact investor sentiment.
He indicates that such news can lead to sharp price changes in Bitcoin. Graham explains that news about regulations can incite immediate investor reactions.
This results in a roller coaster effect, with prices swinging dramatically. Graham notes that sentiment often overshadows fundamentals in the crypto market.
He points out that the fear of missing out is a prevalent theme. Graham suggests that the uncertainty in Bitcoin emphasizes the need for long-term holdings.
He stresses that short-term fluctuations shouldn't dictate investment choices. Graham forecasts ongoing volatility in Bitcoin's prices in the short term.
He believes that long-term investments might benefit from growing institutional interest.
Graham concludes that navigating the Bitcoin market requires awareness of external influences.
He encourages investors to remain informed about long-term strategies and avoid impulsive reactions.
Today, we're breaking down the recent trends in the silver market as analyzed by Wagner.
Gary's insights highlight a significant liquidation event that tested a vital support level.
Wagner emphasizes that a crucial support level for silver prices has been identified.
He warns that a breach of this level could lead to further downturns in silver pricing.
According to Gary, liquidation events like the recent one can cause sharp price swings.
He points out that market sentiment tends to change rapidly under such conditions.
Gary advises traders to exercise caution and reassess their strategies in light of recent volatility.
He suggests keeping an eye on market indicators and adjusting positions accordingly.
Gary predicts additional price drops could occur if the crucial support level fails.
However, he also notes that there may be potential for recovery if the market stabilizes.
Gary concludes that investors must focus on sound risk management strategies during this turbulent time.
He encourages close monitoring of market indicators before making trading decisions.
In this video, we analyze the recent market downturns with insights from Emily Brown.
Emily highlights that rising interest rates and changes in investor sentiment are key factors.
Emily discusses how rising interest rates are causing uncertainty among investors.
David Lin points out that market volatility affects economies worldwide.
Emily explains that as interest rates rise, borrowing becomes more costly, reducing consumer spending.
This could lead to significant economic issues in the future. Emily observes that changing investor sentiment links to fears about economic stability.
That's right, and it often results in sharp market declines.
Looking forward, Emily mentions that persistent trends could lead to corrections ranging from 10 to 20%.
David Lynn agrees, suggesting ongoing instability may be expected throughout the year.
Emily advises investors to focus on diversification to lower risk in these uncertain times.
David Lynn also recommends closely monitoring economic indicators that affect market conditions.
Welcome to our review of the latest market insights from Emily Brown, based on her discussion with David Lynn regarding critical market factors.
Emily's analysis emphasizes the significance of monitoring weekly market levels and the potential for considerable corrections.
Emily Brown argues that we might be nearing a market correction due to overvaluation in equity markets.
David Lynn supports this perspective, noting the recent increase in Treasury yields alongside inflation concerns.
What does Emily Brown identify as the effect of rising Treasury yields?
Emily explains that increased Treasury yields raise borrowing costs, impacting riskier assets like equities.
How is investor sentiment evolving in response to these insights?
Emily observes that many investors are reallocating to cash as a protective measure against expected volatility, indicating a distinct risk-averse trend.
What predictions does Emily Brown have regarding potential market corrections?
Emily anticipates a correction ranging from 15 to 25%, with volatility expected to persist.
In summary, what practical advice does Emily offer for investors?
Emily recommends that investors closely watch Treasury yields and adapt their portfolios to mitigate risks related to market corrections.
Today, we're joined by Jeff Christian for a market analysis, hosted by David Lynn, where we'll explore the significant shifts in stocks, Bitcoin, and gold.
Jeff indicates that there are substantial concerns regarding the stability of these assets, suggesting potential market upheaval.
Jeff Christian notes that stocks are diminishing in value due to escalating interest rates.
He also highlights that Bitcoin's performance is suffering as market sentiment changes, resulting in heightened sell-off pressure. Jeff emphasizes that the rise in interest rates is leading to higher borrowing costs, which negatively impacts company valuations.
This situation prompts analysts to perceive stocks as currently having inflated valuations. Jeff Christian states that Bitcoin is becoming less attractive as a safeguard against inflation.
He points out that the growing volatility in the crypto space encourages many investors to reconsider their strategies. Despite the challenges, Jeff believes gold is often regarded as a safe haven option during tumultuous times.
He suggests that ongoing geopolitical tensions could elevate investors' interest in gold. What predictions does Jeff have regarding the fate of financial assets?
Jeff cautions that should economic conditions worsen, we might witness further declines in both stocks and Bitcoin.
He also notes the potential for favorable entry points in the gold market for discerning investors. In closing, Jeff emphasizes the need for investors to monitor interest rates and prepare for ongoing market fluctuations.
He advises caution in equities while remaining vigilant for potential opportunities in safe haven assets like gold.
Wow, what an enlightening discussion we've had. Each guest brought a unique perspective to the current financial landscape.
Absolutely, from Jeff Christian's warnings about market downturns to Emily Brown's focus on Treasury yields, there's so much to unpack.
It's clear they all agree on the importance of keeping a close eye on volatility and investor sentiment. Both are crucial in today's market.
But what I found intriguing were their differing views on market timing. Emily's optimism about corrections contrasts sharply with Jeff's caution.
And don't forget Gary Wagner's focus on silver. He underscores challenges that are distinct from Stephan's insights on the crypto market.
Exactly, which just shows how multifaceted these issues are. There's much to consider as we navigate these turbulent times.
If you enjoyed these insights, please give us a like and subscribe. Your support means we can continue bringing you valuable content.
Don't miss our next video, where we'll dive deeper into the intricacies of market dynamics and what they mean for your investments.
Thanks for watching, and we hope to see you again soon. Remember to check out our other videos too.